Hi everyone, welcome to Vayalil Capital, the financial superstore market updates. Today I am going to present you some of the factors which may keep traders busy next week. Equity benchmarks as well as the broader markets recouped all the previous week's losses in the week ended October 23 as bulls were back in action. Easing coronavirus risk, better September quarter earnings scorecard, rising industrial and commercial activities, FII inflow and hope of revival of auto demand boosted sentiment. The BSE Sensex rallied 702.52 points or 1.76% to 40,685 and the Nifty 50 rose 167.90 points or 1.43% to 11,930 while the Nifty Midcap index gained 3% and Smallcap was up to 2.65% during the week. Experts feel the positive mood of the market could continue amid September quarter earnings and improving economic activity. But the US presidential elections ahead may bring some volatility in the global markets. Going ahead, Mr. Market is expected to continue its upbeat mood as indices are oscillating around their all-time highs. Indian INC, with its quarterly performance, has managed to keep the markets afloat and on lack of any negative news, indices are likely to inch higher. Investors are advised to wait and watch and buy on healthy declines. On coming Monday, the market will first react to Yes Bank, Nestle India and Tech Mahindra quarterly earnings, though these stocks do not have any major weightage in the benchmark indices. Here are some of the key factors that will keep traders busy next week. For September quarter earnings, September quarter earnings season will remain a key to watch out for in the coming 3 weeks. More than 300 companies will declare their quarterly earnings next week. The most prominent ones are Kotak Mahindra Bank, Bharti Airtel, Tata Motors, Axis Bank, Dr. Reddy's Lab, Hero Motocorp, Larsen & Toubro, Titan Company, ICICI Bank, Maruti Suzuki India, Reliance Industries, BPCL, IndusInd Bank, IOC, Bank of Baroda, Canara Bank, Havells India, Vodafone Idea, Interglobe Aviation, Angel Broking, Phenolix Industries, JM Financial, M&M Financial Services, SBI Life Insurance Company, Torrent Pharmaceuticals, Amra Raja Batteries, CET, ICICI Prudential Life Insurance Company, Nippon Life India Asset Management, AU Small Finance Bank, Blue Star, Cummins India, ICICI Securities, Marico, Max India, MCX, MOIL, PNB Housing Finance, RBL Bank, Root Mobile, Thyroke Technologies, UTI Asset Management Company, JK Paper, Shriram Transport Finance, Tata Chemicals, TVS Motor Company, Welspun Corp, Dixon Technologies, DLF, Jindal Steel and Power, Max Financial Services, Motilal Oswal Financial Services, UPL, DCB Bank and IDFC First Bank. HDFC Bank. HDFC Bank is expected to be in focus next week as Shashidhar Jagdishan will take over the responsibility of country's largest private sector lender on October 27th. Aditya Puri, who led the Mumbai headquartered bank for 25 years as Managing Director and Chief Executive Officer, is set to retire on October 26. Shashidhar Jagdishan has been appointed as an additional director and managing director and chief executive officer of the bank for 3 years after the RBI approval in August. Coronavirus. The risk of coronavirus cases have been declining week after week, which provided strong support to the market, especially when there is an increase in industrial and commercial activities amid unlock. The active COVID-19 cases fell below 7 lakh mark for the first time in nearly 2 months and the recovered cases are 10 times higher over active cases now. The total confirmed infections were more than 78.5 lakh with over 1.18 lakh deaths as per the data provided by Johns Hopkins University. The recovery rate was around 90% on Friday against 88% last week, while the fatality rate remained around 1.5%, the lowest among the most impacted countries. US presidential elections. The US presidential election, which is scheduled to be held on November 3rd, could be a key factor to watch out for globally, and there could be a bit of volatility in the markets. FII inflow continues. Given the improving economic data points, including rising power consumption, indicating the increase in industrial and commercial activities, falling coronavirus cases count, better cooperative earnings, likely further increase in auto sales, etc. could be the supporting factors for the consistent increase in FII inflow. FIIs were the net buyers to the tune of 7,376 crore in the week gone by, against rupees 1,185.51 crore in the previous week, taking the total net buying to rupees 13,564.74 crore in October, whereas DIIs remained consistent net sellers to the tune of 7,800 crore against 5,217.47 crore selling the previous week in the same period, taking total outflow in September to rupees 15,147 crore. Economic data points. Foreign exchange reserves for the week ended October 23 and infrastructure output and fiscal deficit data for September will be released on Friday. India's foreign exchange reserves hit the lifeline high at $555.12 billion in the week ended October 16, increasing by $3.615 billion against $551.505 billion seen in the previous weeks and ended October 9 due to the sharp rise in foreign currency assets. Foreign account reserves soared on account of current account surplus and steady flow of portfolio inflows. It's quite startling to witness India's forex reserve double itself from $275 billion back in 2013, which by most standards is considered adequate. Cases in point B, the steady state of our Indian economy when compared to developed countries where demand revival is quite slow with resurgence in COVID cases. Technical view. The Nifty 50 gained 34 points on Friday and formed a small bodied bearish candle on the daily charts as the closing was lower than opening levels, while it gained 1.4% during the week and witnessed a small bodied bullish candle which also resembles a spinning top kind of formation on the weekly scale, which indicates indecisiveness among the participants. The Nifty index faced stiff resistance at 12,000 mark and made multiple attempts to surprise the same but failed to do so. We reiterate that 12,000 is an extension of the rising trend line which acted to supply zone for the markets in the past couple of weeks, and going forward only to close about 12,000 would bring the bulls back in action. That could propel the index towards life high. On the contrary, a breach of 11,800 level might intensify the panic in the markets, which can drag the index toward 11,600 levels. F&O expiry. The October future and option contracts will be expired and the positions will be rolled over to next month on coming Thursday, which could lead the volatility in the coming week. The option data indicates that a put writing was seen at 11,700, 11,800 and 11,900 strikes, where the highest open interest is still placed at 10,500 strike and the second highest open interest is placed at 11,500 strike. A continuous call writing was seen at 12,000 strike, which also holds the second highest open interest of nearly 38 lakh contracts, and the highest open interest is placed at 12,500 strike. So, the overall option data indicates that the coming week is likely to be more volatile, also due to US presidential elections, while Nifty may oscillate in a broader range of 11,700 to 12,200 experts feel. Successful investing is all about managing risk, not avoiding it. That's all for today. Thank you and have a great day. This is me Tirtha signing off. Don't forget to like, share and subscribe our channel.